Hello traders, Gary Wagner here. Just about 5:30 in New York, 11:30 in Honolulu. It is Friday. Happy Aloha Friday, as we say on the islands. Trending markets here with the weekly wrap-up. What a week we have seen in this marketplace. Dow Jones Industrial Average moving in increments of 1,000-point swings when you consider the highs roughly at 17,500, the lows at 15,500, this being over the last couple of trading weeks. That's quite a move. Over 1,000-point move this week, 2,000 points when you consider the activity over the last, call it 1, 2, 3, 4, 5, 6, 7, 8, 9 trading days, approximately 2 weeks, all over the board. Now, Dow Jones Industrial Average closed off just a little bit. S&P's closing up a little bit. So we'll call it, in essence, unchanged. The real picture when we consider this marketplace is not so much this daily chart. The daily chart shows this decline dramatically. It shows us engulfing bullish on the following day. Yesterday's activity up a couple of hundred points again. And today, as you can see, very, very quiet activity, pretty much in essence unchanged. The real tell of the tape is the weekly chart. We've been talking about this throughout the last couple of trading days. It is still solid green. Absolute recovery when you consider that at the beginning of this week, this marketplace was trading at roughly 16,500. That's right here, corresponds to this open. We had this low below 15,500, therefore that 1,000-point swing in a single week, a 1,000-point swing on the prior week, and you have a market that closed higher than it opened, and considering the kind of lows that it made and where we've opened, this has been a dramatic recovery, to say the least. Not the only market we've seen really have a key reversal or a pivotal reversal. Now, the next market, of course, would be the S&P 500. S&P 500 also, it did close down. It was up a little bit as I looked at it in the close, but closed off about 3 points, 1986. And there's no doubt you're getting the same kind of a candlestick on our weekly chart, and that's a tremendous low with a very strong recovery. This would be considered absolutely a hammer, or more importantly, a consolidating candle, the type of consolidating candle that we have seen before in this marketplace. That's this candle here. You can also see it here, and let's go ahead actually and compress the chart. We did this a little bit yesterday, but what we talked about was the fact that in the Standard & Poor's, what we have seen is when we would have minute corrections in the market, because realize this market's been in an upward track, first characteristic. Second characteristic is all of the retracements really up until this most recent one have been extremely shallow, to say the least, meaning that they've only seen a retracement of anywhere between 4 or 5, maybe 6%, but nothing in the multitude of 10%, which is what technicians officially will term a correction. But the one thing that you can see without a question of a doubt is that following these small, shallow retracements, you get a small-bodied candle with a long tail, very hammer-esque. Here you get pretty much a doji right here. Here you get that doji, the real body size isn't that small. And here you get really a full-blown hammer or doji, but you get these consolidating candles on each and every occasion in which the market has corrected a little bit and then move back up, corrected a little bit and move back up, corrected a little bit and move back up. Why is that important? Because it's very likely, if history repeats itself, for this to be a real indication that, in fact, what we will see next week is going to be a market that moves higher and really starts to make up some of the ground that it lost. Now, it made up a tremendous amount of ground when you consider where it opened at, which is the bottom of that real body, to the low of this candle, an extreme move in the marketplace. You also see that extreme move here. You see it to some degree here, although not as much, and you do have it here, although not as much. So what I am seeing, at least on these charts, is the fact that we've got a very similar pattern forming. One, two, these candlesticks are a lot more exaggerated in terms of the lows that they hit, in terms of the formations that we are identifying, but that's because we had a real correction here of about 10%. My sentiment is that we'll probably enter the market with the mini S&P 500 from the long side come Monday, because I think that if what we're seeing is similar to this activity here, here, or here, we are really in line for a nice little clip up. And I think that that would be our best play for the week. Of course, we are going into the weekend flat. We did pull profits on our crude oil trade, and my God, we were short that market. Look at this. It was up about 10% yesterday, up about 6% today. 45.33 per barrel. Realize we went short at 41.86, covered at 40.20. We made a nice profit on the trade, but this market has just been up, and away. Now, the real question is, did we see a key reversal, or are we simply looking at a marketplace that similar to the move that we saw back in April, in which the market hit this double bottom at that point, moved up, and then really traded sideways for the better part of April until beginning of July, falling off? We have definitely had this market come up over this area. And the question that I asked yesterday is, will this area become support or resistance? Obviously, with this kind of close, it is most likely going to become support. So where are we going to see crude oil move to? Have we hit the bottom? Will it begin to track higher? That's something we'll have to determine as trading begins next week and this whole scenario unfolds. I think that for right now, we're going to watch oil, but we're going to enter, as I said, the Standard & Poor's from the long side next week. I think that that's going to be our best trade of the week. Gary Wagner for Trending Markets. We'll talk to you on Monday for another review and report. Bye-bye.